Hey there, Morgan. Looking at FedEx shares right now, they are moving higher after the company beat on the top and the bottom line. A significant beat when it comes to earnings. The estimate was $5.84 a share. The actual was $6.07 a share. A little bit of color in the quarter in the report, but honestly, only a little bit. They talked a lot about FedEx Express, where the business that's air delivery generates about 50% of revenue. They said results improved throughout the quarter. They also said they saw increased U.S. and international export volume throughout the quarter, basically alluding to the idea of a pull forward of freight ahead of tariffs or companies trying to get ahead of those tariffs, also a higher base yield, a premium for some of those services. They also say those factors were partially offset by higher purchase, transportation, and wage rates. Basically, FedEx contracts a lot of their business when it comes to their ground unit, especially to contractors. Looking a little bit deeper inside this report, the revenues for the Express business, again, where they get about 50% of revenue, that's air delivery, that beat estimates. The freight revenues came in at $2.297 billion, also above estimates. 1 point that may stick for investors right now. You saw the stock go up and it's gone down about 0.5%, lower than initially did. FedEx actually missed when it came to Express margins. Margins are very important for this business. Margins came in at 8.4%. The estimate was for 9.4%. But very important to note, it was a significant improvement from a year ago where it was 6.9%. Also, the freight business margins came in better than expected. That's also important because FedEx is planning to spin off its freight business. That's a less than truckload business into its own separate publicly traded company. There were some reports that some customers were perhaps switching services ahead of that spinoff. But right now, looking at FedEx shares, are actually moving just a bit lower. Also, guidance for the Q1, the current quarter, revenues were higher than expected, but the EPS guidance was a bit soft. Right now, FedEx shares pulling back about 1/3 of 1%.
Yeah, flat to 2% revenue growth for the current quarter. What got my attention here, Frank, is the CapEx numbers, because we know this is a company that over the past 2 years and under CEO Raj Subramaniam has been taking cost out of the system and parking planes and consolidating businesses and doing things to pull billions of dollars out. And so in the report where they talk about capital spending for fiscal 2025 of $4.1 billion, down 22% from the year before, certainly noteworthy. And the fact that they reached those forecasts in terms of how much they took out of the system. But what also got my attention here, Frank, is capital spending of $4.5 billion for this upcoming fiscal year, where they're talking about investments in network optimization and efficiency improvement, including fleet and facility modernization and automation. So we're actually starting to see some of that spending maybe tick back up a little bit here.
Right. Also, to your point, going back to some of the efforts to reduce costs, they actually took I believe it was a $27 million charge for parking a few planes. Not a big number for a company that obviously generates billions, but just kind of speaks to some of the impact of their idea to optimize their network. And then going forward, you also have to remember, these are going to be two separate companies. When we're talking about FedEx Freight and I guess, FedEx OG or the original FedEx, they're going to need both separate sales teams and other operations. So some of that CapEx spending might be part of that spinoff, just basically completely separating those two companies. Yeah.